Welcome back, everyone, to the channel. I hope you are all having an amazing day today. Before we jump into this deep dive update on Cardano 8A, make sure you stay tuned till the very end, because we are going to break down everything from price action, technical structure, market sentiment, derivatives data, and the latest governance concerns that are currently influencing 8A's market direction in a major way. And as always, price predictions and market analysis. This content is for educational and informational purposes only. It should not be considered financial, investment, or trading advice. Cryptocurrency markets are highly volatile and involve significant risk, including the potential loss of capital. Always conduct your own research, DYOR, and consult with a qualified financial advisor before making any investment decisions. The views expressed in this video article are based on current market data and analysis and may change without notice. Now let's talk about Cardano ADA, because the market has been showing clear signs of pressure, and things are starting to get more interesting and more concerning for traders watching this chart closely. On Tuesday, Cardano price extended its losses, dropping nearly 3%, continuing a broader bearish trend that has been building over recent weeks. The selling pressure has been consistent, and bulls have repeatedly failed to reclaim important resistance levels, which has left ADA trapped in a weakening structure, with lower highs forming again and again. At the time of this analysis, ADA is slowly drifting toward a critical demand zone near the 22-cent region. This area is now becoming extremely important for traders and investors because it represents one of the last strong support levels before a potential deeper breakdown could occur. Market participants are now closely watching whether buyers will step in at this level or whether bearish momentum will finally push the price below this key psychological and technical support zone. What makes the current situation even more sensitive is that this price weakness is not happening in isolation. Sentiment around Cardano has also taken a hit due to recent governance-related concerns. Reports circulating within the crypto community suggest that Cardano Summit 2026 was canceled following a failed treasury vote. According to discussions spreading across social platforms, a proposal linked to approximately $2 million in treasury funding reportedly failed by a narrow margin, even though it had majority support in some segments of the community. This development has raised fresh questions about Cardano's governance structure and decision-making efficiency. While governance is one of the core pillars of decentralized networks, any perception of internal friction or inefficiency can quickly impact investor confidence. Traders are now questioning whether such governance delays or failures could eventually affect ecosystem growth, developer participation, and overall momentum going forward. Now, to be clear, the cancellation of a summit or the failure of a single proposal does not necessarily change Cardano's long-term fundamentals. The network still maintains its strong academic foundation, active developer ecosystem, and long-term roadmap. However, timing is everything in financial markets, and this particular governance setback arrives at a moment when ADA is already technically vulnerable. That combination of weak price structure and negative sentiment tends to amplify downside pressure in the short term. In crypto markets, perception often moves faster than fundamentals. When sentiment turns cautious, it tends to reinforce existing trends rather than reverse them. Right now, Cardano is experiencing exactly that type of environment, where bearish sentiment is feeding into already weak technical momentum. Looking deeper into market structure, Cardano remains firmly locked inside a prolonged downward trend. The chart continues to show lower highs, weak recovery attempts, and repeated rejections near key resistance zones. Every time ADA attempts to bounce, sellers step in aggressively, preventing any sustained breakout. This creates a pattern where bullish momentum is constantly being interrupted, making it difficult for any meaningful reversal to establish itself. From a technical perspective, ADA is now approaching what many analysts consider its most important demand zone in recent weeks. The 22 to 24 cent region has historically acted as a strong support area where buyers previously stepped in to stabilize price declines. This zone now becomes a critical battlefield between bulls and bears. If buyers manage to defend this region successfully, we could see a short-term relief rally. In that scenario, ADA may attempt to recover toward the 28 to 30 range, where stronger resistance is expected. That zone would likely determine whether any rebound has real strength or whether it is simply another temporary relief move within a larger downtrend. However, the risk scenario is equally important to understand. If ADA breaks below the 22-cent support level with strong bearish momentum, it could confirm continuation of the downtrend and open the door for further downside movement. In that case, the next potential area of interest could shift closer to the 20-cent level, which would represent a deeper retracement and a more concerning technical breakdown for the asset. Beyond spot price action, derivatives data is also providing mixed signals that traders should not ignore. According to CoinGlass data, ADA funding rates have recently turned positive even while price continues to trend downward. On the surface, positive funding rates suggest that traders are leaning long and expecting a rebound. However, when funding becomes positive during a downtrend, it can sometimes indicate a crowded long position environment. In simple terms, many traders may be betting on a recovery too early, even while market structure continues to weaken. If price continues to fall while leveraged long positions remain open, the market becomes vulnerable to a liquidation-driven move, where forced selling accelerates the downside. At the same time, open interest appears to be declining, and spot momentum remains weak, which suggests that overall conviction in the market is still limited. This combination typically reflects a risk-off environment where traders are cautious rather than aggressively accumulating. Putting all of this together, Cardano is currently facing a combination of technical weakness, fragile sentiment, and uncertainty-driven pressure from governance-related headlines. While none of these factors alone guarantee a major breakdown, together they create an environment where downside risks remain elevated in the short term. The key question now is whether ADA can stabilize at the current demand zone. If buyers step in with strong volume and defend the 22 area, we could see a temporary recovery phase develop. This would not necessarily confirm a full trend reversal, but it could provide short-term relief and potentially reset market positioning. On the other hand, if selling pressure continues to build and support fails to hold, then the bearish structure is likely to extend further. In that scenario, traders may begin preparing for another leg lower, and sentiment could shift even more cautiously as momentum continues to weaken. In conclusion, Cardano is at a very critical stage right now. The combination of weak technical structure, governance-related uncertainty, and cautious derivatives positioning has created a fragile market environment. The next major move will likely depend on how price behaves around the 22-cent support zone. A strong defense could lead to recovery attempts, while a breakdown could trigger further downside continuation. As always, traders should remain cautious, manage risk properly, and avoid emotional decision-making in volatile conditions like these. The crypto market can change direction very quickly, and staying informed is the key to navigating it successfully. If you enjoyed this breakdown, don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss any future updates on Cardano, Bitcoin, Ethereum, and the overall crypto market.